Well,
Tom,
Alexander,
thank you for that. That was, I wasn't able to bottle it up, but that was 10 out of 10. Fantastic. Thank you.
Well, I wanted to say exactly the same thing. I think this is the most interesting piece of analysis, actually, I've heard for certainly this year and probably for the last 2 years, actually.
I invested £25,000. Today, that investment is worth £5 million.
Say hello to our hero, the Hydrogen Energy Release Optimizer. Limitless power, zero emissions.
NordVPN is becoming more than just a VPN. Threat protection will guard your device against malicious websites, malware, trackers, and intrusive ads, even if you're not connected to a VPN server at the time. Step up your cybersecurity and stay safe.
All right. Thank you, everybody. Thank you, Alex Krainer. Thank you, Tom Luongo. Thank you, Alexander Mercouris of the Duran. And I'll have all the links in the description below. If you're a regular subscriber, you will know what this is about. We're not going to have all the video on YouTube, so please come to bit.ly/CryptoRichOdyssey. Email sign up, and you get to earn crypto just for watching videos, and you support my work on a censorship-resistant platform. And not all of it is going to be on YouTube because some of it might be a little bit too indelicate for YouTube. Also, follow me on Twitter, CryptoRichYT, and join my official Telegram announcements channel. Yes, Tom will behave himself while he's on YouTube. And then on Odyssey, Tom, Alex, myself, and of course, Alexander Mercouris, we will turn the air blue. Well, maybe not Alexander.
Good morning, everyone. How are you all?
Yes. Yeah, good morning. Good morning. Yeah, good morning to you, Tom, in Florida, and Alex, good morning. Good afternoon to you in France, and you and I, good afternoon to us, Alexander, and everybody from the UK. All right, we're going to start with the dollar, and with you, Tom, and then we'll go on and cover something. There was a NATO meeting, there's something happening in Ukraine, and apparently there's something happening in Holland and France, and Biden's the most popular, successful president ever. We're going to look at all of that.
All right. So we've all been looking forward to the NATO summit, right? Because we all looked at it and said, okay, it was very clear that they were that there was something being prepped for the NATO summit, not just the potential accession of Sweden and Finland, but how was Ukraine's status going to change was really the big question that was on everybody's mind. And would that become a tripwire and a red line crossed that would escalate the conflict in Ukraine from kind of a border skirmish, legally a border skirmish between Russia and Ukraine, to a full-blown, multinational world war, right? This was what was kind of, at least that was what my worry was. But interestingly enough, and in my circle, it's all, if I hit my Twitter feed, it's all a bunch of rotten conservatives and libertarians who just found it horrific that Janet Yellen, U.S. Treasury Secretary Janet Yellen, went to Beijing and kind of looked like she was genuflecting to Xi. And there was a whole lot of that throughout conservative Twitter. Yeah, I think that was part of it. Now, on Monday, or at least on last Friday's close in the bond markets, we had I wrote about this the other day. So for those of you who, I'm not going to put the charts up or anything, but the last article I put up on my website on my blog, I told everybody that we've gotten to this moment in time where everything was about to melt down. That Christine Lagarde over at the ECB has her own set of red lines. 2.5% on the German 10-year, 3% on the Dutch 10-year, 4.25% on the Italian 10-year, all the way across the line. The French 10-year, the 3%, all of it. And she's just literally drawn a line in the sand. Now, if you remember back a year ago, just about a year ago, she announced the Transmission Protection Instrument, or what I like to call the toilet paper initiative, which is what's going to eventually trash the euro and turn it into toilet paper, is where she said, I will absolutely try to manage credit spreads, meaning I will manage the yield spread between French and Italian debt, or German and Italian debt, and US and Italian debt, and all this stuff. And she's as good as her word. And that's all I've been tracking US German yield spreads for over 2 years now. And both the short end and the long end. And I've talked about it, I've written about it. It's all in the latest article. I keep updating it for the public, but longtime subscribers, my Patreon, know that I go over this stuff every week and the twists and turns of it every week. So last Friday's close, the U.S. 10-year closed within a hair's breadth of a major breakout to the upside in yield, meaning the bond prices were falling. Now, as U.S. yields rise, everybody else's yields have to rise in sympathy, right? Especially if you've got a major central bank trying to maintain yield spreads, because like, for those of you who are not, like financial professionals and whatnot, understand that there's all that derivative time bomb that you may hear about all has to do with spreads. Like, there's derivative contracts written that, someone makes money as long as the spread doesn't get wider than this, right? And then once it gets to this, something breaks, someone goes broke, and the positions have to be dumped, or a margin call happens. This is what happened to interest rate derivatives on UK gilts last summer, when the Bank of England had to do a cash call in order to pay off BlackRock. Okay, this is what happened. Okay, and for some more color on that, I did a podcast with Danielle DiMartino Booth where she went over why it was so bad. But I don't want to go down that rabbit hole now, because it will muddy the waters. But understand that there's a lot of vulnerability built into the UK and European banking and central banking system if yield spreads break out above levels that the world doesn't want them to be, that she can handle, because otherwise everything will blow up.
Now, Tom, I've told you many times before, and this still remains true, bonds kind of baffle me, but from what I'm understanding, what you're saying, right, is that the yield spread, say the difference between the US interest rates,
yes,
and in particular the German interest rates, it can't get too great, because then he would leave Germany to go.
What would happen is a whole bunch of people who are an interest rate derivative contract that says, that has hedging the euro with German bunds against the dollar in U.S. Treasuries, that position would then become uneconomic, and there may even be a clause where there are going to be bets out there where, like, you owe me, the whole contract is worth zero and you owe me the balance of the contract. Like, there's a lot of this stuff out there. Okay, there's also a lot of stuff where it's a carry trade, where somebody's long one and short the other, and then the interest rate differential collapses. In this case, as the German debt would rise faster than U.S. debt, and then that hedge would become uneconomic. They'd be losing money on it, so they're going to cover that position, and they have to reverse the position by selling whatever they're long and buying whatever they're short. Like, this is just the way the world works.
Those are the details, but what it would mean, is that if the yield spreads get too big, then essentially, say some of the German bondholders, they're going to get liquidated. They'd lose the money.
Or people who have bet against the German bond or for the German bond, because it all depends. There's an array of contracts out there,
but it creates a mess. It creates a big
creates a mess, and it distills down to watching the central bank policy on this. Right. So just watch the 10-year German bond. Go put up a weekly chart on investing.com, and you'll see a flat top at 2.5%. Every time the German bund gets above 2.5% on a weekly closing basis, next week, miraculously, there's a 20 basis point move down to buy the German bund. It's happened like 5 times over the last 6 months. Okay. It's sincere, and it's not just the German bund. You can see it in the Dutch 10-year. You can see it in the Italian 10-year. You can see it in the French 10-year. You can see it in the American 10-year, because there always seems to be some kind of crisis event that causes a rally in U.S. Treasuries the very next week. So guess what we had this week? On Monday, the markets start to break out to the upside, just on the eve of Vilnius, but on the NATO summit at Vilnius. And then the CPI comes out in the U.S. on Tuesday, and it's not that big a deal that the inflation numbers in the United States were slightly lower than expectations. But somehow, miraculously, that caused a 20 basis point or 0.2% move in the entire American yield curve. Okay, like an historic move in terms of size in the American yield curve. Like, major banks failed. Okay, like, COVID hit. Like, this is the level of move that we saw on Tuesday. Now, let's back out for a second. And what happened over the weekend? And I didn't catch this, right? But somebody else did. I saw it on Twitter. They just put up like an hourly chart or a 2-hour chart of the Chinese yuan versus the USDX, the US dollar index, and timed it to when Yellen landed in Beijing, and the dollar dropped like a rock in a complete directional move that that would never ever happen in a real market. And the US dollar went from 102.5 down below 100 within 2 trading days. And it was relentless. The selling pressure in the dollar was relentless. So what happened? Clearly, Yellen must have gone to Xi, hat in hand, and said, I need you to buy treasuries. Because if you don't, then the ECB is going to break. Then the American markets are going to break because the yields are going to get too high in the American markets, which will break the ECB and break the Bundesbank. Remember, 2 weeks ago, we had an auditor come out and say the Bundesbank is effectively bankrupt and needs a bailout. Like, this is how close we are to the end of times. And this is also on the verge of the NATO summit. Now, one could argue that maybe the Chinese were in there dumping treasuries in order to push the yields up, in order to put everybody in the box. That's a perfectly reasonable assumption to make. Or somebody else was selling treasuries in order to put Lagarde in the box. I don't know. Maybe his name is Jerome Powell over at the Federal Reserve. It could be anybody. Okay? The point being is that what did Xi extract from Yellen for this? Now, we don't have any hard data on this, and we won't until we get the TIC report from the United States, the Treasury International Capital report about July, which we won't get until September, right? Because that data is published 3 months in arrears. But the markets are screaming that somebody intervened hard in the currency and bond markets this week to save the ECB. And the Japanese yen went ballistic to the downside, strengthened hard. The British pound moved to $1.32. The euro moved to $1.12. Everybody sold dollars like they were, like they had COVID. Like, seriously. And it was a weird moment in time, and everybody bought bonds. And it was the only thing and that happened, right, while everything else vis-a-vis the CPI made sense. Oh, the CPI came in lower than normal. That means the Fed's probably not going to raise in July. Therefore, gold broke out. Therefore, oil started to rise. The U.S. economic data has been better than we thought. Therefore, dollars can be flooded back into the system, and people can get off of their worry that Powell's going to raise interest rates. And so, okay, you're buying bonds? None of that makes any sense, right? So, like, it was just discordant behavior. So clearly this stuck out like a sore thumb that something went on here. This is what I think happened. Yellen goes to Xi, hat in hand, and needs a bailout. Remember, my thesis, Yellen works for Davos. She works for Europe. She doesn't work for the United States.
Okay.
At Vilnius, Biden has to back off World War III. Why? Because he doesn't. This is where they're being caught in a rock and a hard place between here over this issue. So what does Xi say? Yeah, you're not. Stoltenberg and y'all are going to not give Ukraine anything. You're going to make it absolutely clear to the entire world that Ukraine has to be this tall to make it into NATO, and Ukraine is this tall and will never be higher than this. Meaning, you need to win the war by December to get into NATO. Guess what? You'll never win the war. They already know you can't win the war. Like, they set the bar so freaking high, which is why Zelensky was so angry. In effect, Xi sat down, put them in the box and said, "This thing is over. Stop it. If you don't want that, we can break you." And by we, I mean myself, Jerome Powell, and the rest of them, who are literally and the U.S. Pentagon, who are literally trying to stop this train. And it all fits in with Biden backing Stoltenberg as NATO's general secretary for another year, not backing Ben Wallace, friggin' IQ 60 soccer hooligan, running NATO. Like, at this point, excuse me, but would the French be caught dead, in public? The French military be caught dead in public with their pants down, doing unseemly things in public, and having a British foreign minister run NATO at this moment in time? Yeah, no, that's not happening. So Wallace is out. The Greens were the German Greens were screaming about this. Everybody, the Poles wanted this to happen for NATO and everything else. Moreover, the Ukrainian offensive failed, and now everybody who backed this whole pushed Ukraine into this terrible offensive, which has just ground up tens of thousands of young men, has failed. And now they've all looked at it and gone, "Yeah, we need a way to get out of this that makes some sense." Because okay, well, this thing's failed. Well, okay, we're done now. Let's pivot to the next strategy. And the next thing, what we're going to do here. And so this is what I think the smoking gun of the lack of World War III that came out of Vilnius was presaged by Yellen going to Beijing and the moves we saw in the bond markets this week. That was the howitzer pointed at their head, saying, "You will get this done, or we will break you."
Right. So what you're suggesting, Yellen goes to China.
Yep.
You know, as a representative of Davos, WEF, EU, ECB,
and the U.S. Treasury, who needs to raise $1 trillion in, refill the Treasury general account, because during the debt ceiling crisis she drew it all the way down, and she's got to raise $1 trillion, and someone's got to buy that debt.
Right.
And I've been saying for a while, I'm like, I expect foreign central bank take up to be pretty good. I didn't expect it to be this good.
Right.
But if you look at recent Treasury auctions, recent Treasury auctions, central bank buying of U.S. Treasuries has been off the charts.
Right.
So that money had to go to the primary dealers and then dumped off at the Fed. Very little of that. Like Zero Hedge covers all the Treasury auctions, and if you watch them all, the headlines on them have been off the charts. Like best 3-year bond auction in U.S. history, best 5-year bond auction in U.S. history. Seriously, in the last 2-3 weeks, and these things are important, guys. This is how you find out where how you all this stuff together, and how you tie what you see the heads of state saying. Usually comes in after you've seen something else happen in the financial markets.
Okay, all right, Tom. I'm going to come to you in a second, Alexander. So the way I understand it, she goes to China representing the Treasury, Davos, WEF, ECB, EU, say, look, buy US Treasuries. China does that. Yes, we'll do that. It results in a dumping of the dollar, the euro, the pound, the yen will go up. And in return, Xi says, puts his boot, like Ukraine doesn't get to join NATO. That's the exchange. That's what you're proposing. Okay.
It's something along those lines. And we won't start a trade war, and you're going to back off in Taiwan, blah, 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 blah. I mean, he can extract whatever he wants from her here. Because remember, I make the argument that too many people make the argument, oh, well, the Chinese could just dump all their treasury bonds and destroy the dollar and everything else. Yeah, the Chinese don't want to do that.
No,
like that's under no circumstances they want to do that. They want to have a nice, orderly. If they're going to de-dollarize, it's going to be nice and orderly and everything else. Because they, as Uncle Jamie, sorry, I hate to do this, but I like to tweak people. Uncle Jamie Dimon has said multiple times now, you're not going to decouple the United States and Chinese economies. It's just not possible. What are you out of your freaking mind? And when Dimon goes to China a month ago, sets up this big symposium, meets with all these, Chinese CEOs and members of the Politburo, and he gets a better and warmer treatment from the Chinese than the Treasury Secretary does, who's effectively the president setting foreign policy. Yet I think we know where China's mind is, where they are. So, and then what happens like later this week? Klaus Schwab comes out and says that China's the model for the digital future or whatever. Did you see that?
No. Okay. All right.
Yeah, so like, oh, really? So now all of a sudden the old European money is like, how do we keep the Chinese on side?
Yes. All right, Tom. Hold on. Okay. Alex Krainer, Alexander, which one of you wants to come in on this? Alexander, you're on mute.
I'll just say something very briefly.
Please. Now, to hear the rest of this fabulous conversation, the fabulous analysis from Alexander Mercouris, Tom Luongo, and Alex Krainer, please go to my Odyssey channel, bit.ly/CryptoRichOdyssey, and I'll have the link for this video in the description below. bit.ly/CryptoRichOdyssey.